Hello traders, hello everyone. It's Monday, July 22nd, and welcome to our new webinar. Just let me put my phone on mute here. Okay, so please just let me know if you can hear me, if it's everything well. Tim is here. Hey Tim, how are you doing? So, looks like that everything is fine. So what's going on? As you know, we have seen some interesting spin in the markets last week. Firstly, and more importantly, the risk off was seen already ahead of a few events. As you know, on Friday there were global IT outages, very big issues actually, which I'm surprised that Microsoft did not seen any serious damage when looking at prices. And then on during weekend, as you know, it looks like that Trump is now closer to win the US, to become the next US president, because Biden obviously decided to be out of this race, and this is also something that could keep dollar in recovery mode, at least for the short term, because as you know, somehow Biden was not and their politics was not that bullish for stocks, or I should say rather markets in general. Then what we have seen and what was quite interesting, cryptocurrencies have seen some very nice push to the upside despite the sell-off that was going on, but that's still some kind of a risk going into this week, that stocks could see some pullbacks. I see there are some nice extensions moving into some resistances ahead of trading for ETFs on Ethereum. So if there would be too many hype, I just think that there can be some intraday setbacks. And more importantly, when looking at the S&P 500, I just think that we stepped into this consolidation period that I've been warning for this summer. I really doubt that markets will just go one way to the upside during summer, and especially ahead of election. But what's good about this is that we most likely are moving into a corrective period, and this correction could possibly extend into summer, maybe September, maybe even October, and then during elections we may see a next push to the upside, especially if there would be even more weakness on stocks. I just think that they will act and they will cut rates sooner than we think maybe, and of course they will want to stabilize the markets. But when looking at the wave structure, as you know, we've been calling for this small ending diagonal at the top. It was a very perfect example of a very strong reversals, because this Y ending diagonal actually causes a sharp move, because everyone thinks that market will just keep moving to the upside, and when market is trading smaller and smaller range, it brings on even more traders that want to join the uptrend, because there is price at around similar levels for a very long time. So there are more and more traders that want to join this ride, but unfortunately usually the market will make an opposite reaction, pretty strong one. So we have a very strong sell-off here. It's, in my opinion, bearish impulse. More importantly, we are seeing bearish impulse back into the area of a previous fourth wave. Now, if usually this fourth wave will represent very strong, very nice support, but whenever there is a one leg back to this area, then you can expect that even wave 4 supports will be taken out, because there is plenty of room for more weakness till we complete this ABC drop. We are also testing this trendline support. In my opinion, there could be some maybe buying going into the start of this week, but next rally for wave B will probably cause the limited upside and cause a new leg to the downside. Okay, so I just think that we are moving into this correction. Also, I have another wave count here, which possibly shows that maybe we are still in a wave 4 here, but even this wave 4 obviously should see more weakness. So if you are more like an intraday trader looking for some setups on stocks, I just think that maybe you have a very clear identified risk here at the highs. Okay, now this current risk of flows should also tells you a lot about the dollar. Okay, so if we are in a risk off mode, then dollar obviously should see a bit of more upside. But before we go to the dollar, let me also bring on VIX, known as fear index. So this was trading at this very low levels for for the last few months, and I have been repeating that always when that's the case, you just have to be aware that sooner or later something will happen, the volatility will pick up, and normally this will bring the prices lower because of fear. Because whenever you see very strong sell-off, there will be traders that will try to book some of the profits left, and obviously this will put even more downside pressure on stocks. Also, if you look maybe here on Nasdaq 100, here also we have seen a pretty strong sell-off now at the former wave 4. I think that this can be some temporary support now, but really think that much more weakness or at least sideways price action here will be seen for a wave 4. I doubt that that's all of this wave 4. Also, if you look maybe here at this candlestick formation and maybe just hide the wave counts for a minute, you can see potential evening star formation here, right? So I think that's a pretty dangerous, that could send us much lower if we see a break below these lows from the previous week. Also, Dow, as you know, has came out of this triangle. Normally moves out of a triangle are final in a sequence, and you will see a very sharp reversal back that will send us back into the previous consolidation. So even this one looks like it can be topping out. More importantly, if you look here on Russell small caps, you can see that, as you know, there was some serious market shifts from big caps to small caps, and even this one has recently came to the downside. So maybe that shift that occurred, I think 2 weeks back, was maybe the first indication that something is changing and that something is going on the markets in the middle of the summer. So I really think that maybe for the rest of the summer we will just keep consolidating here. Now if we take a look on dollar, so as I said, whenever you are in a risk off mode, be aware that there can be money flows into cash, and in such case dollar and even Japanese yen will do well. And as you know, Japanese yen has seen a very strong reversal to the upside lately. It's been the case since the US CPI softened, reported a week or 2 weeks back. At the same time, Japan also made an intervention in the market, so momentum is in the side of a very strong Japanese yen, and now we are also seeing stocks coming to the downside. So it looks like the Japanese yen really could stay in an uptrend here. But before we will cover maybe dollar yen a bit later, let me take a look on dollar. So as I said, dollar is most likely headed even higher here for a recovery, okay? Because we have here this 5 waves down, okay? So it makes sense maybe to expect more dollar strength now when we are seeing stocks in a pullback. And again, if you're familiar with the Elliott wave principle and just trying to focus more on some, let's say, for moves that could unfold through the week or in the next 2 weeks, and not trying to predict the price moves too long from here, then of course you should focus on 3 wave structures. So here we have a completed 5 waves down. We rallied this quite nicely so far, so it looks like that's an impulse, meaning more upside should be seen after wave B. So there will be plenty of opportunities here on the long side of the dollar, but of course you will have to be very selective against which currencies you will be looking for potential setups, because not all of the currencies are showing the same strength. Okay, so obviously if you want to be long dollar, you want to trade against the currency that is very weak. If you want to be long Japanese yen, you probably will look for setups against the currency that is very weak. So we will take a look on some correlations later. So key point here is that we have a completed 5-wave drop. We take these lows out but recovered back above it. So it looks like that was a failure breakdown, and we are now in a corrective phase. And of course this makes sense, and it perfectly fits with the bearish Elliott wave view here. Also, if you look at emerging markets, even this has turned to the upside last week. Looks like that here we are also in a corrective pullback, meaning that there will be not meaning that at the moment cash dollars are not flowing out of the US to emerging markets. Okay, it looks like that this trend has now paused a little bit, and this makes sense to expect maybe even deeper correction here. This is another reason why dollar could be in a recovery mode. Now, if we take a look on the euro, what's maybe the most important is that you look at the daily chart, okay, and just realize where are we at the moment. Okay, so at the moment on the euro dollar, we are still in the pivot area of this very big triangle that is now in play for more than a year. So triangles are structured by 5 subwaves: A, B, C, D, and E. So if we respect the subwaves and the substructures, then of course we are not expecting the breakout just yet, because we are still missing this wave E. And I believe that that's maybe the perfect timing when we expect this wave E retracement, at the same time when now stocks also turned into this risk-off mode for potential just for a wave 4. But still, when we analyzed the S&P 500 earlier, we were saying that looking for 3 waves down, that can be wave 4. So plenty of room for that correction to unfold. And obviously this could bring euro dollar even lower. Looking maybe at the 4-hour time frame as well, notice that here ABC rise can be counted from April lows. We are, as I said, in the middle of summer. I'm not expecting that these trends will just resume with one directional movements here. I just think that there will be always some pullbacks, and so far we are seeing this broken trend line falling out of this channel, suggests that wave C might have ended, and we are looking for more weakness here. Let me just check something, okay, because I saw earlier that the S&P 500 is recovering a bit, which I said that could be potentially just new price scale, just way big corrective, temporary corrective rally. Okay, so now I want to see, because I see that the euro dollar is currently trading to the downside, so I want to see how the S&P is lagging. Okay, so you can see that euro dollar is already at the lows while the S&P 500 is recovering. So if I think that the S&P 500, which by the way is in orange now, is now in a temporary recovery and will see further sell-off, then clearly euro should see much more weakness, because it's very weak already now. It's trading at the lows. So this really makes me think that dollar will stay up, because it's showing its strength against the euro, even despite the fact that the stocks, or the S&P 500 is recovering at the moment. So you can imagine what will happen when stocks will also hit some resistance and sell off. Then of course euro could be much lower. Okay, and I will even keep an eye on potential, who knows, some shorts, very small shorts on rallies on the euro this week. Now, as I mentioned earlier, dollar yen. Firstly, maybe it's very important to look at those correlations that we've been also sharing a few times in our chat room, in our members area. Okay, so if you're not our website yet at wavetraders.com, make sure to check this out, because we will update you on those markets frequently each day. And we were posting this chart in our chat room where we analyze the correlation between dollar yen and Nikkei. So on the top we have Nikkei, and what we saw is that few months back there was a year back there was this break to a new high, which obviously came out of a triangle. Okay, so we started tracking this 5-wave rise. And a few weeks back, we said that most likely, whenever Nikkei will complete the uptrend, make a new high for a wave 5, that's when we can expect a top on dollar yen. Okay, so Nikkei actually has seen a very nice thrust out of this 4th wave triangle. Let me just draw the lines for you. Okay, that was a triangle. So we have seen a very nice thrust out of this triangle. So we expected that this will be a very significant reversal, because we know that moves out of a triangle are final. Okay, and it was part of this impulse up from 2023. And now when we have this very strong reversal, of course, it means that there are outflows from Japanese stocks into cash of Japanese yen, and this makes dollar yen even more bearish. So we are seeing Nikkei still not breaking this trend line yet, but I just think that this will happen in the next few weeks, maybe even sooner. And of course, this would make me think that dollar yen will see much more weakness. So if we take a look now on dollar yen, as you know, from the highs, we can actually count 5 waves down. And I've been sharing this wave count on Twitter as well. So we can count 5 waves down, and now the counter trend rally. We have seen some limited weakness here around 155, 156. And now if we are correct, then we are now in a temporary recovery. It means that 159 will be very strong resistance after this subwave C. So watch this area, because I think it can be the next swing zone that will make Japanese yen very strong. Okay, but of course, maybe if stocks will continue to the downside, US stocks, global stocks, and risk of most, maybe dollar yen is not the best pair to look for potential trades, because you will have money flows into cash when both dollar yen and Japanese yen will be doing well. So in risk of mode, maybe it's better to look at yen crosses. Okay, so, but before we go to some of the yen crosses, let me look at this correlation chart. Okay, so here we have, you can see the black line here. Okay, it goes to Thursday, July 11th. That's actually when we got this, I think that's the right date of the, it was the release of the US CPI data that softened, and also when there was a speculation that Japan intervened in the FX markets. Okay, so back then we have seen stocks firstly sold off. We have seen a print of new high, but not confirmation on those Japanese yen crosses, which actually later on experienced even further decline as soon as stocks turned to the downside. And if we now want to check the percentages of a weakness of some of those crosses here from July 11th, you can actually see that Aussie yen, okay, that Aussie yen is one of the weakest. Okay, and I also see Aussie versus Kiwi at potential resistance. So Aussie yen looks like it can see a lot of damage from here or after rally, especially if stocks will also stay weak. So looking at Aussie yen, well, here we have the wave count. Some very strong impulsive bearish reversal, clearly an impulse, maybe some support. Watch out at 103.60. So if you want to look for potential shorts here, you want to sell rallies. Of course, don't just blindly jump for it on Monday. There won't be just one straight move from Monday till Friday. There will be new swings in the middle of the week. So maybe there will be better opportunities if we wait in a wave 4 whenever this one will show up. Also, if we will maybe look at higher time frame, you can see that price is also now approaching this wave 2, wave 4 trend line support. So potentially we are not far away from potential supports, but as I said, you want to possibly to sell rallies if you want to look for opportunities on the downside. But clearly that looks like a very sharp, very serious reversal, significant reversal that will most likely keep dollar yen on the bearish foot here. Okay, and that the higher degree trends were probably finished. Now let's take a look. Brian Wonka, hey guys, how are you? Shaban is also here. By the way, please make sure to press a like, subscribe to our channel if you didn't already done so, and hopefully we will continue to grow here on our YouTube. So that was for ASEAN. Now let's take a look on gold and silver. So as you know, last time when we spoke about gold, I said that maybe there is room for 2,500. I said that silver could also continue to the upside, but obviously this did not happen. I was wrong on some of the short-term predictions, but whenever that's the case, I will step out, I will zoom out the charts. Okay, I want to see where we stand on a higher time frames. And if you look at the gold daily charts, still we cannot ignore that we have a very strong impulse. But the dollar turn that recently occurred obviously will put some bearish pressure on metal. So I'm thinking that maybe this impulsive cycle from October of 2023 is already finished, and that we are possibly stepping into a new consolidation, okay, into a new phase. So where are we of this Elliott wave cycle? If you're familiar with the Elliott wave principle, then you know that market will always try to move in 5 waves, while the pullbacks will be corrective in 3 waves. And ideally, we are now here in the middle of this wave 4 retracement. So still plenty of room for this correction, which by the way can take us back into the area of a previous 4th wave, right? So this still is around 2,300. That would be ideal support. I'm not saying that we are going straight to that level, because if you are in a wave 4, well, wave 4 is a corrective leg, can be zigzag, can be triangle, can be combination, can be flat, can be very tough to trade. Okay, so it's very important to understand that this can be just a consolidation phase. Same thing like within this wave 4, very hard to trade because market was actually sideways. Okay, it was very messy, but still this kind of a structure makes us confident that this is a corrective pose, and sooner or later market should explode higher. And this has happened, and if we came out of a triangle, then we know that most likely that was a 5th wave top, and we are now in a new correction, ideally again wave 4. Also, if you look at the 4-hour time frame, notice that market is breaking this channel support, and that's another indication why the 5th wave can be ending, especially if we consider that this drop can be impulsive. And I also shared levels and intraday structure with our members on this one as well, because I just think that more weakness here will be seen, and maybe some will try to short rallies, especially if you're looking for some intraday trades. You clearly have identified the risk in validation levels of this current reversal. So I just think that more weakness there can be seen. And regarding the potential trade setups on an intraday basis, whenever you will have 5 waves down, this will be another indication why maybe some will try to short the 3 wave rallies. Okay, I'm also quite certain that there was a lot of money sucked into this bull run as soon as we broke to new highs here, and now you can see what happens. And it's a very similar, if we just hide here, it's a very similar, as you can see, a reversal that we experienced here back in May. Okay, now again, so clearly we have plenty of time for this correction to unfold, and again for market to stabilize before we can take another jump higher here. Now if we take a look on silver, also I just think that we are in a correction here. If we would hold this 28.50 and we just go back above 30, then maybe even triangle would be still possible, but definitely it's way too soon to say that that's a triangle. So you have to be open-minded and just realize, as I said earlier, that plenty of different corrections can occur within wave 4. So the best simple idea at this point is that maybe that's an ABC and could potentially see even dip towards 27, 28, which is the next big level that probably everyone wants to pay attention. Okay, if we start falling back below $26 here on silver, which by the way was this swing high from December of 2023, then important swing low of this year. So if this major, let me label it. Okay, so if this major level would be taken out, okay, if you see a move below that level, then I just think that major high has been put in place here on silver. okay? Because keep in mind that we are tracking wave C going out of a triangle here. So I think that this level around, as I said, 26, very, very important to invalidate completely the bull run. Okay, now let's take a look on crude oil. So what's going on crude oil? Well, as we've been repeating and saying that we're still in a very big triangle. So market was become very bearish down here when we said that probably that we should be aware of a bounce. It was the same but opposite sentiment up here. Now we are coming to the downside. So ABCDE triangle is still valid, okay? But my concern is that even this rise somehow was strong, can be even counted in 5 waves. So as I already discussed last time, maybe that was impulse for a wave A, and we have a triangle here in a wave, bullish wave B, meaning that maybe will we see even 100 level before the next very strong dip will come here on crude oil. But what's important is that for now we have only 3 waves from the most recent swing high, from that resistance. So because we have 3 wave drop, it's very hard for me to say that market is headed straight down from here, okay? I don't want to gamble this and say something that it's completely opposite to what I'm waiting for, okay? I want some confirming price action. And what's this? Well, if on a smaller time frame you will see impulsive activity here to the lower side of this range, meaning if you will be able to count 5 waves down, then you will exactly know in which direction market should follow, will go, and what this probably will mean for inflation going forward, okay? But for now we still have only 3 waves down if you look on a smaller time frame. So it's a little bit too soon to say that this is the bearish trend straight from here, okay? Because in a few days, who knows, maybe we'll go back above $81 or so, and you will immediately have to realize that this triangle, very big one, is still in play and potentially could be even a bullish one. So keep in mind that these are still very big ranges that are not broken yet, and unfortunately it's very hard to confirm the next very big leg unless you see certain levels broken. So above 85 you could look for much higher prices towards 95 for 100, which would be the very big resistance, or below 72 there is even room for $60-50. Looking at the higher time frame charts to give you the full perspective, I'm thinking that we are headed down because drop from 2022 highs can be counted in 5 waves. So I think this is a serious reversal that sooner or later will take us even lower. But as I said, firstly we have to see that this correction is finished, okay? And then you will have some intraday setups probably within this downtrend. But for now looks like that we are still in the range, unless you are like to playing the ranges between the levels, then obviously that's the different story. You sell high, buy low. Okay, now let's take a look on some of the single stocks here, okay? So firstly, let me check my list here. Nvidia. Well, what happened to Nvidia? Well, we've been talking about Nvidia reversal when everyone was saying that we go straight to the upside. I was saying that, look, you just have to respect the price action, okay? Because everyone, not only price action, the sentiment as well. We know how everyone is bullish on Nvidia, how overextended bull cycles were, and clearly we had to respect that at some point market will slow down, okay? And the most important confirmation that market is slowing down, started to slow down, was of course this drop back in June, which clearly was impulsive. Then we've been tracking wave B rally, and now we already touched the new swing low. So looks like that these post earnings cycles, as you can see, I compared the current cycle with this one that go back to February and then till April of this year. So firstly, you got strong earnings, market jumped straight into it, it pushed the prices higher. After a few weeks, market comes back, it slows down, and it even retraces back to this date when we got this gap following the strong earnings. So again, now we had these strong earnings in May, strong push to the upside, just temporary movement. We're stepping into correction, and I think that there's still room to retrace back to this gap date, going back to May 24th. So still plenty of room for this correction to unfold. And even if I would go to the smaller time frame, I just don't believe that this wave C is finished yet. So there is room for more weakness, at least in the short term. Okay, and then we will see what market will do around 110 or 105, because that's the potential support area for wave C. So still you have three waves decline from the highs. Okay, so if we respect that we have higher highs and higher swing lows for the last few years, then obviously whenever you have three wave setback, well, this can be maybe opportunity to join the trend. Okay, so the key support would be around 110, 105, around here. But if this one will not hold, then unfortunately we will step into much higher degree consolidation. Okay, so watch this area very closely here, very closely over the next few weeks. But as I see, earnings are still more than a month from now, so maybe this correction have time to unfold and return us back into these previous earning levels before new earnings will be released. Also, if we look at AMD as well, that was a free wave rise, perfectly stopped at this resistance channel as well, breaking the lower side. So I mean, that's a so classic powerful Elliott wave pattern. I should better just print this chart, because it really just shows you what kind of patterns we should track. So whenever you're looking for trading, for some investment idea, for some levels, the most important, at least for me, is to find the clear wave pattern just few seconds when I open the price chart. That's the most important. Okay, so if you will spot, because in such case you will exactly know what is the pattern, you will not be confused. Okay, it's totally opposite when you have some very nasty overlapping price actions and you are just struggling where the market will go next. But here I just think it's very clearly defined. So here we also have now a correction. This one has a plenty of room for more weakness. We are just breaking wave B swing low, so maybe clearing some stop levels, some liquidations may be happening down here. So watch out for a rally and then potentially even more weakness towards 133. That was the swing high from start of the year. So yeah, I mean, levels from start of the years, these are always very important, because as you know, there's a new tax year, new portfolio adjustments around this level. So if you bought it here, the question is, what will you do if prices will retrace all of your potential gains and market goes back to 133? Well, a lot of liquidations, a lot of positions will be again adjusted at these levels. Okay, and we know what happens then. Market bounces. That's how it usually works. Now let's take a look on semiconductors as well. So here also I was looking for this potential resistance area. We are selling off pretty significantly. I'm not saying that we are now just stepping in a very big correction. Could be just another wave 4 here, but even this wave 4, I mean, should see more weakness then. I mean, we have a very nice drop. Potentially we are going to see some gap retest and then further weakness, maybe for a wave C, maybe even for a wave 3. But I just think that this correction still, it's not over here. Okay, let me check my list here. Tesla. Okay, so Tesla, higher time frame, still a very big range. Okay, we are now at the upper side of this potential triangle. So even this one, in my opinion, is not going to break out just yet. I think that there can be some consolidation, new correction first. Looking maybe here at the smaller time frame, let's assume that we are maybe in a sub-wave 4 of an ABC rally here. So maybe another push to the upside. I don't have a full wave count here from a higher time frame. So maybe another push to the upside here could potentially complete or limit the upside here for this wave D. Okay. Now let's take a look also on Microsoft, what I have here. So Microsoft has seen a pretty strong sell-off recently, but I'm amazed. I mean, we haven't seen much of downside pressure on Friday, but still, I just think that maybe we are in a new consolidation here. Just watch out for potential support around this lower trend line, especially if this trend line would be retested with after three waves from the highs, then this could be quite interesting. But if you will see possibly this trend line broken, this channel broken, then I just think that we are going to see a retest of this previous swing low. So still consolidation phase that in my opinion is not over yet. Now let's take a look on a much more interesting part when it comes to bull runs. As you know, cryptocurrencies have seen a pretty nice and very strong bull run, and I've been tracking that's from 3 days back. Firstly, this one maybe I said on Friday in our members section here that we could see a new push to the upside out of this consolidation on cryptocurrency that was on Friday, possibly already during the weekend. Okay, because what we have seen is that Nasdaq 100 technology sector has seen a very strong move, as you can see here on this chart in orange, but still market was trading relatively good. So I was just thinking that now when everything will slow down, will come down for end of the week, that during the weekend cryptos could see another push to the upside, especially because these Ethereum ETFs will start trading, and obviously there was at least some positive news. And then we also got news that maybe Trump is now closer to win the elections, and that's why of course market cryptocurrencies love this because Biden definitely was not so fan of this digital era, and definitely maybe some new president can be more open to new technologies, innovations, and so on. And so that's why maybe we are also seeing some very nice push to the upside here. Now, if we look at the current wave structure, okay, that was from earlier. So you can see that now we have on a total market cap, we have these 5 waves up. Okay, so now when we have these potentially 5 waves up, just be aware that there can be some correction. As I said earlier, if dollar is really showing us some early signs that we are in a temporary consolidation here, then and that stocks now, when stocks are in risk off mode, maybe we'll still get this ABC pullback. Okay, so of course cryptos are bullish, no doubt, but if you want to be long, you want to see the dips first and then maybe be selective on different cryptocurrencies and look for potential ABC structures before entering the trade. So I definitely would not rule out a potential correction still this week. Also, if you look at Bitcoin, obviously very bullish trend here, but again we can be possibly approaching some resistance levels. But I realize that sometimes when cryptos are in a very strong bull run, you will not see any serious very interesting pullback, and it will be very hard to join the trend here. But because of what I see on stocks, I just think still that it's better to wait on this dip. Also, what's interesting, when you look at liquidations heat map, you can see the plenty of liquidations here around 72,000. Okay, so somehow unfortunately I just love to see this lot of liquidations up here, because obviously this looks like a magnet. So if we get a pullback, I'm quite confident that we could clear this area out before we may again potentially see a new pullback. So if you see a dip, I think that after this next dip we will start running and start liquidating these positions up here at these levels. Also, let's take a look on Ethereum. Here potentially 5 waves up in a very late stages. First resistance has been met here at 3,500. The second one is at 3,659, which was the swing area here back from mid of June. So clearly this could be quite attractive zone for bears to show up. Also, if this resistance area that we are now trading could potentially limit gains. Then maybe, who knows, this will be left shoulder, head, right shoulder, if this would really prove to be a very strong resistance here. Okay, so again, after dip, I think that we are going higher. Also, what I have here is Ripple. So Ripple has seen some sell-off, as you know, security, and what I read earlier, I'm not sure if that's true. If anyone has any thing to add, please let me know or correct me. Security and Exchange Commission last week canceled the meeting with Ripple. So I'm not sure why, or if we have any news, please let me know in our chat box. So definitely this cancellation triggered some sell-off. Market turned it down here for what, 13%. But again, you have to realize where is the big picture, or where is the trend. I mean, here clearly was a very strong impulse. So I still think that that was just a temporary impact, and that possibly we are in ABC correction. So very nice supports around 48 to 51 cents, from where I think that there can be a very nice push to the upside in a context of a higher time frames, where we are tracking very big triangle, as I've been also talking about in our webinar last time. Okay, so traders, we just came to an end. Let me know if you love this analysis today. Also be sure to be with us next time. I will still be here next Monday, then I will be off for vacation. So make sure to put your notifications on YouTube, and I will be glad to share some charts, new ideas, new analysis in the near future. Also, if you want more of those updates on a daily basis, make sure to check our services at wavetraders.com. Okay, traders, again, talk to you soon. Bye.